Hello everyone, happy Tuesday, the 1st of October. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. The 1st of October, it means the start of a new month, but it also means the end of the previous month. And that means that we have completed monthly charts for the month of September. What I want to do is basically cut this week's videos into two halves or two shorter videos. And the first one, which we're going to do right now, is to look over and make an assessment on the monthly charts for US sectors. And then in the second video, I will address the seasonality that comes with it for the next month and just have a little bit of a look back on what happened in September and see if we can bring that into some sort of a scenario. The first thing we're going to do is look at the monthly charts. Just a little bit of a caveat. This is long-term stuff. These are long-term trends, not necessarily reflecting shorter-term views or tactical moves. This is the really long-term stuff for people who want to know, and I think that goes for everybody, needs to be aware of the underlying trends that are currently present in the market. Let's kick this off with the chart for the communication services sector. And what you can see is that it is confirming its uptrend. I've labeled the chart as up. By the way, spoiler alert, all of the sectors, including the S&P 500, looking at the long-term charts, are in uptrends. One a little bit more than the other, but they're all technically in uptrends. So having said that, the telecom sector, the communication services sector, they broke through their previous high. This is one of the very few sectors that has not moved to new all-time highs yet. Because as you can see, the all-time high for communication services dates back to 1999. That is 25 years ago. We are now approaching that level. We are getting very close. It's around 330. So this trend is definitely there, but I expect a lot of resistance, a lot of overhead resistance in that 330, 335 area. Nevertheless, the trend is up, higher highs, higher lows, so no problem there for communication services. If we go to consumer discretionary, you can also see that this sector has not taken out its all-time high as of yet. It took out some overhead resistance that was present around 1500, 1525, and we're now moving towards the all-time high area, which is around 1690s, let's say 1700. So there's still a little bit of upside potential before we run into resistance. But after the decline that we saw in 2022, consumer discretionary is now in a nice rhythm of higher highs and higher lows on the monthly chart. And last month, so the month of September, actually confirmed that it is making a series of higher highs and higher lows as we broke through this previous high that dates back to July. Looking at consumer staples, this is one of the stronger sectors. Defensive sector, you've heard me say that a lot of times in the last couple of months, but this is a very clear break from, I would say, a trading range that started back in late 2021 and remained intact until 2 months ago. So here, this month here in August, we had the very clear break with a nice long bar taking out that all-time high level that dates back to April 2022. And it's now confirmed by last month, which wasn't such a long bar, but we're holding up, we're putting in a new closing high, we're putting in a new monthly high. So that is a good sign for the consumer staples sector. So that trend is also up. If we look at energy, this is, I mean, I've labeled the trend up because I think that, you see that these lows are still all higher, but you also see that despite the fact that the highs are also kind of higher or at least at the same level, they're having trouble. They're having trouble breaking higher. We had 1 month, which was in April, where we tried to move higher above that 720 area, 725 area. But we dropped back, and now the last couple of months we have been, going lower, not necessarily taking out the previous low. So if I have to put, good and bad labels on US sectors, I think that the energy sector right now is, from a price technical point of view, the one in the most trouble. It's got a lot of overhead resistance. You can see how there is, there's obviously that high that dates back to 2014. And then we tried it in 2022 and again in 2022 and 2023. This is also 2023 September, and then in February, March of this year we peaked above it in April, and then all these months we played around with that level around 720 and we never broke through. So that makes that a very heavy resistance area which will be hard to break. If it breaks, however, that'll be a very strong sign for the energy sector, but we're not there yet. So from a price technical perspective, I think that this is probably the least interesting sector because it has such little upside potential if we take into account that overhead resistance around 720. Looking at financials, broke to new highs 2 months ago, 3 months ago, and holding up still there. So a very good sector. Long-term trend is up, confirmed by breaking that high, that early 2022 high, which we tested earlier this year for 3-4 months, but then we broke higher and we're still holding up. So that old high here around 700 is now expected to start acting as support in case of a decline in the financial sector. But the trend as such is looking good. And then here we have healthcare, another defensive sector. It looks a lot like utilities. Also a sideways range here that started at the end of 2021. Played in a range between 1395 and the upside here is around 1680, 1670, 1680. Then we moved higher and we put a new resistance area around 1725. And that got broken 2 months ago and we're still holding up. You can see that this is one of the few sectors that had a negative month for the month of September. That close is lower than the close of the previous month, but we're still above that breakout level, and as long as that holds, that uptrend remains intact and the long-term trend for the health sector remains up. Industrials, nice series of higher highs, higher lows. We broke above resistance that was already happening at the start of the year. We had a little bit of a consolidation in the middle of the year, starting in April, and then we broke higher probably July, August, and now September we really moved higher and closing at a new closing high and a new all-time high. So there's no doubt that the long-term trend for the industrial sector is also higher, it's going up. And information technology, largest sector in the market, almost 30% or over 30% at the moment. Lots of struggles over the last couple of months. You can see that we made the high in July. We almost reached the same level in June. And then after that, we've been kind of struggling. We dipped to a low to 3,700 back in August. And we're coming out of that low right now. If you look at the shorter term charts, which we'll do in our regular videos, and we'll do that in the seasonality video as well, you can see that there's a new higher low in this series, and even on the monthly chart it is visible. So the uptrend, defined as higher highs and higher lows for the technology sector, is still present. And the next thing that needs to happen to make it persist is to take out that 46.17 high that was set back in July. So nevertheless, uptrend still there, big part of the market, goes a long way in how the chart of SPY looks. And then here we have materials, also a sector that reached its highs at the end of 2021, and we've been struggling to get higher basically since the start of this year, start of 2024, and we finally broke higher this month, the month of September. We managed to break above this overhead resistance, which was in the area of 585, 590, and we're now trading above 600. As long as this holds, then the trend in the materials sector remains up. It's labeled up, all these sectors are up. You can see how, I hope you agree with me that this is a nice break. This is confirming or igniting a new trend, whereas, for example, technology sector is just doing its thing. It's continuously moving higher, just like the industrial sector. Here we have a fresh break for the materials sector, and I think that's worth noting. So we've got fresh breaks for materials, got fresh break for healthcare, got fresh break for staples, got fresh break for utilities. So that's something that you probably need to keep in the back of your mind. Here's real estate. That's an interesting one. Also, one of the sectors that is not really pushing to new all-time highs. It set its all-time high at the end of 2022, right here. But what I think is interesting is we did form a major low here in the real estate sector. And we already started when we come out of this low here, when we took out that high, and then we took out this high, and now we're taking out the previous high, and we're confirming a new series of higher highs and higher lows. I think the XLRE sector, the real estate sector, is now targeting the all-time high that was set back in November 2021, and that's around 325, 330. So in terms of risk and reward that we can actually measure, because the sectors that are trading in uncharted territory, is very hard to put a price target on it. But here we can put a very good price target around, let's say 330, 325, 330. So we're currently trading at 280. So that's about 40 to 50 points. That's a decent percentage gain for the real estate sector, with, and that's important, relatively low risk, because this old resistance between 260 and, let's say 260 and 270 is now expected to start acting as support. So your downside risk is relatively low, while there is still very decent upside potential targeting all-time high levels. And then there's utilities. I already gave it away that this is a fresh break for utilities. Coming out of a consolidation, we now see a very strong move, which started at the end of 2023, and it continued all the way through 2024 this year. And now in September, we're finally breaking above all-time high levels that were set in early 2022. We're taking them out. As long as that holds, there is new upside potential for the utility sector, fresh upside potential. So we've got all three of the defensive sectors, but also all the others breaking to new highs. So we're going to look at an RRG, a relative rotation graph, on a monthly basis to see if we can find any meaningful rotations that will help us to distinguish which sectors are the best. Because as you've noticed by now, they're all in uptrends, and that's where relative strength comes in. That's where relative strength analysis adds value to the process, because if you would just look at all these price charts for sectors, these long-term price charts, they're all in uptrends, so they're all a buy signal if you want. But we will see that some are better than others. Better is in better, B-E-T-T-E-R, not better. Anyway, new break for utilities, confirming the uptrend, confirming the strength in this sector. And then we rounded off with the mother of all indexes, the S&P 500, covering all 11 sectors that we just looked at. And when all these 11 sectors are breaking out to new highs and showing uptrends, it's not a big surprise that the S&P 500 sector is doing exactly the same. You know that I have been, and probably still am, a little bit worried about what's going on here. Although signs are kind of shifting. We'll take a look at that when we look at the seasonality stuff. But, you know, again, and I've said that many, many times, the long-term trend is up. It's still there. And everything we do in terms of trying to time or trying to pick out a specific sector rotation or a tactical decline in the S&P 500, that's exactly what it is. These are dips in longer term, in the longer term uptrend. And I have to admit it, I was expecting that dip to be a little bit bigger than what we've seen so far, and I need to reassess whether the move that we saw in August was actually the dip and we're now ready to move higher, or that we are still in a situation where we are at risk for a little bigger move. And you know, if you look at this chart here, if you look at the S&P 500, I mean, I can totally see the S&P 500 dropping back to 5,000, 4,500, 5,000. It will not hurt that longer term uptrend that started back in 2009. And then, you know, making a new low somewhere in this area before starting to move higher. It'll give the market a little bit more air, a little bit more fuel. But if it doesn't want to do that, it doesn't want to do that. And so everything we do in terms of trying to catch such a decline, it is trying to play the market within the longer term uptrend. I hope that I made myself clear on that. Okay, so here is the monthly version of the RRG for US sectors, and you can find that in the drop down box. You can select the monthly time frame and it will load up the 11 sectors with the monthly data. So this gives you longer term trends versus S&P 500, of course. Now, I'm very, very aware that this chart looks very, very different than the ones that we usually use, the weeklies mostly, and to a lesser degree the dailies. So please be aware that this is really long-term stuff. Nevertheless, it's very interesting. What we see is that technology, if we would just use the RS ratio as the ranking mechanism, technology is still the highest ranking sector, followed by communication services. What you also see is that both of these tails are pointing lower. Technology is already on a negative heading, and communication services is somewhat neutral. It's not between 0 and 90, which we consider to be the best, but it's also not between 180 and 270, which we consider to be very weak. So tech is, in that sense, weak. It's still losing on both of these metrics, both of these scales, which to me makes it a sector that is lagging the market right now. Despite the high reading, in the near term, technology, and this is the near term, this is the next few months probably, if you look at this monthly time frame, technology is under pressure, and so is communication services. What you also see is the weight factor playing in here. These are big sectors, and it needs a lot of smaller sectors on the left-hand side to balance that out. And you can also see how tech is balancing out financials and real estate, and communication services, and to a lesser degree tech, is balancing out all that stuff inside the lagging quadrant. What's also interesting to view is that the sectors like utilities, staples, healthcare, to a lesser degree materials, industrials are picking up a little bit of momentum. Energy is, as I said, it's probably, if I need to put a label on it, in terms of strength and weakness, energy is one of the weaker, if not the weakest sector. Look at this long tail moving to the left, wavering around 92 on the momentum scale, but not really picking up. It's looking completely different than, for example, utilities or staples, and to a lesser degree healthcare. So the energy sector, remember that chart where we had a lot of overhead resistance? That's what you see playing out right here. What you also see is the upward break in communication services, and to a lesser degree technology, which are confirming their uptrends. They're not the speed of the uptrend, which is essentially what is relative strength. The speed of the uptrend versus the speed of the S&P 500 is not as strong, but because it made such a large move, because it was so strong for a long time, it's still camping out here to the right, and possibly, sitting there to refuel, to take a breather, and then rotate back up higher. Another one which I think is interesting from a relative point of view is consumer discretionary. This is also a sector that has not taken out its all-time high. It's now pointing lower. This is definitely one of the weaker sectors in terms of relative strength. It's still a good sector in terms of price, although it didn't take out the all-time high, but you can see the effect of relative strength playing out right here. And then you can see the real estate sector, which we talked about when we were talking about the monthly charts, which came out of that big bottom and has quite a bit of upside potential. That's what you see playing out here on that monthly RRG, where the axillary tail is actually starting to move in the right direction. It's probably at like 35 to 45 degrees on the RRG heading, which is absolutely strong. And then the XLF tail is, it's too early to say it's worrisome, but it's not following its path as expected. This last move here did not really follow through, and that makes the financial sector, in terms of risk, that it could turn around and regain negative relative momentum and make it an underperformer again, despite the break to new highs. Again, and this is the end of the month, so we'll have to wait and see how that plays out further. But this is the long-term rotation. It kind of matches with the strength that we see in tech and communication services. It also matches with the strength that we see in utilities, staples, healthcare, breaking out to the upside, as well as materials. And it also matches the weakness that we see, or the relative weakness that we see in consumer discretionary and energy, and also the strength and the upward potential that we saw in the real estate sector. This wraps it up for this version, this video of this week, dealing with the longer term trends on the monthly charts. I hope you enjoyed it, and I'm looking forward to seeing you again next week, same time, same place. Or maybe this week with the video on seasonality. Anyway, see you next time.